Ladies and gentlemen, Greg Michalowski with the Forex Quick Look at the dollar versus Canada. Today's date is April 2nd, 2024. Let's get started. Why do I look at a 4-hour chart? Why do I look at an hourly chart? Well, I'll start by taking a look at the hourly chart, and this is why I don't like to look at the hourly chart. Look at the up and down volatility that we're seeing in this currency pair. There's there's little rhyme or reason intraday at times, and over a few days time period. So it's very sloppy. It's up and down. What we can say in trading here today, however, is maybe the 100-hour and 200-hour moving averages, these two lines right here, are trying to hold support. The 100-hour moving average comes in at 1.3559. If we break below that level again, we were below it earlier. Perhaps it opens up the door for further downside. But as you can see, we're currently trading at 135.71, so we are above both of those moving averages, which is more bullish for the at least in this perspective. From a technical perspective, the high price that we saw in trading here today stalled near the high prices that we saw in trading yesterday, near the 135.85 level. So 135.59, 135.85 off the hourly chart. Let's take a look at the 4-hour chart now and see if it makes any more sense, or at least gets a little cleaner. And we look at this perspective. At least we can see the importance of this yellow area up here. This yellow area goes all the way back to periods back here where the price was forming a floor here. Before moving to the upside, we came back down to the floor, tested it here, then moved above and below it here, and then used the level as resistance, moved lower here. Again, came up to the level here and moved lower through here. It wasn't until a month or so ago that the price, maybe even more, where the price came up to that area and started to find willing sellers, and we found sellers again and again and again and again in trading last week and the week before. So this area between 136.04 and 136.629 is a key level. It also is home to the 61.8% retracement. That's of the move down from this high right here to this low right here. So that and this whole swing area is key on the top side. Now we are down here at 135.72, which is 28 plus 27, 50, 60 pips away from the high of this swing area. But we can head up there without much problem if we can get above the high price of 135.83, this high price for this week, or 85, and stay above that level, and then we start to look toward that swing area on the top side. Now on the downside here, at least on the 4-hour chart, I have earmarked this swing area right through here, which comes in between 135.26 and 135.43. Also in that area is the 50% midpoint of the same move down from the high price down here to the low price down here. So and in addition to that, we have the 100 and 200 bar moving averages on the 4-hour chart in play in that area. So here we sit at 71-ish type level, 72, and we're in between this swing area, 100, 200 bar moving average, 61.8% retracement. Pick which way you want to go, but what we're seeing in the dollar versus Canada, lots of ups and downs in this currency pair. So be prepared for the volatility in this currency pair as it tries to figure out which way it wants to go. By the way, we do have a U.S. jobs report, and we also have Canadian jobs report on Friday. Maybe that is going to give us a more clear direction of which way this pair goes. But the Canada and the U.S. Maybe on the same path here, but the U.S. dollar is probably a little bit better bid versus the Canadian dollar above the moving averages and 50%, so on and so forth. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.